tracking another important story. So ahead of the monetary policy on October 6th, it is usual for the banks as well as the brokerages to really write reports asking RBI to hike or cut the repo rate. But this time, SBI economist S Ghosh has a different request in his pre-policy report, and he wants RBI to keep the call money market open till 5:30 p.m. instead of 2:30. Tell us more about this, Latha.
Yeah, I know all of you are used to the stock markets asking for longer hours, or at least exchanges asking. Here is someone asking for the call market. Now, okay, first for the policy itself, SBI is not asking for any change. They expect the repo rate to remain as is, nor are they asking for a change in the stance, which is withdrawal of accommodation. But very peculiar, in a pre-policy report, SBI is hoping that the call market timing will be extended. Currently, it ends at 2:30. Can the RBI extend it to 5:30? Now, why? What is the reason? See, let me give you a bit of a background. The Reserve Bank is wanting to keep liquidity tight. We know they also announced an ICRR, incremental cash reserve ratio, last time. But, banks actually, on a normal way, in a normal day, borrow and lend in the call money market. You don't know how many people will withdraw and, ask for money. So they go to the interbank call money market and borrow from each other at the repo rate, at 6.5%. But if liquidity is short, then they can go to the RBI's MSF window and borrow from RBI at a slightly higher rate of 6.25. If liquidity is plentiful, then that excess money the banks can sweep into RBI's SDF account, standing deposit facility, where they will get a slightly lower 6.25%. Now, if there is tight liquidity, then no money should go to SDF, because there are enough people in the interbank call market ready to take. Now, what SBI has found with its study, and they've studied a long period from April 2022 to September 2023, 18 months, they are saying that on 247 days, liquidity was deficit. And banks were going to the MSF window to borrow from RBI. Yet, in those 247 days, on an average, some banks were depositing on an average 76,000 crores per day in the SDF window. Why did they do that? They could have lent in the call market and got a higher percentage, 6.5%. SBI tells you the reason. The reason is this huge growth in NEFT and RTGS transactions. Call market closes at 2:30. You get large transactions afterwards. Banks have to be prepared with money. So they are putting a lot of money in the SDF window. Although there was 39,000 crores of demand on all those deficit days, banks didn't lend to those other banks. They kept it in SDF, and post 2:30 they could withdraw from it and lend, use it for these purposes. So what Soumyakanti Ghosh concludes is that this 76,000 crores is a unusable liquidity. It is surplus liquidity, but it is unusable because banks have to keep it as buffer. Now, this unusable or useless liquidity, as you call it, precautionary liquidity, can be reduced if the call market is kept open till 5:30. So that, big RTGS demands, during office hours, they will come. Keep it open till 5:30, then, this useless liquidity or unusable liquidity can be reduced. This is his request. Of course, it's not a particularly MPC issue. It's an RBI issue. But nevertheless, that's one of the demands.
Well, that's interesting, right? We've been talking about extension of trading hours across markets, and this is a new one that we have heard about as well. Thank you so much, Latha, for joining us with that interesting report and the takeaways there. With that, we'll do one thing, slip into a short break. For now, more news and updates on the other side of the short break. Stay tuned.